Hello and welcome to Extreme Crypto. In this edition, we'll be talking about Bollinger Band. We have heard a lot about Bollinger Band, especially when you start doing technical analysis, you'll be hearing about Bollinger Band a lot. It is very popular. It is developed by a man called John Bollinger in the 80s. Bollinger Band is very popular because it is used by most professionals across the world. And it is a very simple technical tool. It consists of 3 bands, as you can see. We have the upper band, middle band, which is a 20-period simple moving average, and we have the lower band. So we can see an example of how Bollinger Band looks on our screen right now, and it is not complicated at all. It's just that we have to understand how to use it in the appropriate way. So in Bollinger Band, it's showing us that the price keeps fluctuating between the upper band, middle band, and the lower band. So 90% of the time, the price will always be within the band. So the band is like a channel for the price, and it is also giving us the momentum of the market, whether the market is uptrend, downtrend, or the market is flat. And when the price first starts in the Bollinger Band, let's take, for example, the price starts from the lower band, it will try to touch the middle band. And once it touches it, and crosses the middle band, it moves to touch the upper band most of the time, and not always all the time that it will move from the middle band to the upper band, because the band serves as resistance for it. The lower band is serving as a support most of the time, and the middle band can either be resistance or support. So we have to pay attention to what is happening in the channel and the momentum of the market. So when it crosses the middle band, most of the time it rises again it moves to touch the upper band, which then serve as a resistance, and from there the price might comes down again to touch the middle band, which might serve as a support. And if the support is broken, the price moves from the middle band and goes to the lower band, which will serve as a support. Another important thing to understand is that the size of the Bollinger Band keeps changing. So the size keeps changing, and it keeps telling us about the volatility of the market. The bigger the size, the more volatile the market is, and the smaller the size, the lower the volatility in the market. What we mean by the size is that how wide is the channel. If the channel is very wide, that means there is a lot of volatility in the market. And if the channel is narrow, that means the market is not really volatile. So the market is flat, it is ranging. So we need to stay away from things like that. And like we have said before, this will help us know the market trends. And there are 3 types of market trend. So we have the flat market, we have the uptrend, we have the downtrend. So if, for example, now we are in an uptrend, Bollinger Band will show us in the sense that the price will remain within the middle band and the upper band. If we are in an uptrend, the price will remain within the middle band and the upper band. So in a flat market, the price fluctuates within the band. That is, it will touch the upper band, comes down, touch the middle band, and go down to touch the lower band, and from there again to the middle band to the upper band. So in that case of scenario where it can easily go from lower band to middle band to upper band, and within a very short period of time, that means there is no volatility in the market at all. The band will actually be very narrow. And if it is in a downtrend, the price will remain within the middle band and the lower band. So we'll actually show us a live example of how these things actually look like, so that we'll understand what we are trading, if we should trade or if we should not. Actually, you should only try and catch 2 types of markets, the uptrend and the downtrend. So in a flat market, the price is not actually going anywhere. The market is not decided, and it is not advisable to trade at that particular period of time, because your money will just be stuck in the market. So you either trade the uptrend or the downtrend. So what basically Bollinger Band is trying to tell us is that when the price nears the upper band, we should prepare to go short, because the upper band now is serving as a resistance for the price. So at that particular point, when the price reach there, it might get resisted. So if at all it did not get resisted and it goes beyond the line of the Bollinger Band, at that particular period of time, we can consider that commodity overbought. And when something is overbought, we should expect that the market will fall after that. So when Bollinger Band is at the upper band, when the price is at the upper band of the Bollinger Band, we should get ready to go short. And when the price is at the lower band, just the explanation we give, the lower band is the opposite of the upper band. When it is at the lower band, which is serving as a support for the price, so we should prepare to go long. And if the price goes below the lower band, it is considered as oversold. So at that particular period of time, we should expect that the bull should come into the market and start buying again. To use Bollinger Band, you can't use it alone. You have to combine it with other technical tools. But the best technical tool to combine it with is candlestick pattern. So before you take a long position or a short position on your Bollinger Band, you have to have another form of confirmation from your candlestick pattern to actually tell you that, okay, now you can go long or you can go short. So let's first look at how to set up our Bollinger Band in TradingView. So let's go to TradingView. Here we are. Let's search for a particular coin. Let's just say KLV. It's on KuCoin. So we have KLV now. To bring our Bollinger Band on it now, let's click on this indicator icon. Search for Bollinger Band. I already favorite it because I've used it before. So for the purpose of this lecture, I'm just trying to bring it back on the chart. So we have our Bollinger Band on our chart now. There's no any other special settings we need to do. What we need to do now is just, let's first explain some things I've talked about earlier, like the trend in the market. So we can look at the channel formed by the Bollinger Band now, and you can actually be able to pick out when the market is uptrend or downtrend. So for example, now from this particular point here now to somewhere around here, so the market was in an uptrend. The market was in an uptrend till from this particular point again, it came down a bit. From here, it came down a bit. And it started moving up to this particular point again. And from here, from this particular point down here, we can see that the market tried to move up, but not quite long before it gets rejected at that particular point. So the channel alone is telling us where the market is, whether it is an uptrend or it is in downtrend. So one thing again we need to understand is that the price will try as much as possible to stay within the band. Anytime the price is actually outside the band, that means something else is happening. So for example, at this particular point here now, we can see that the wick of this candle, like we have like 3 or 4 candles outside the band. So at this particular point here now, we can consider this point as oversold. So from here now, we can take our long position, and you can see that from here, we actually start moving here, and the bull came in and pushed the market upward. So from here now, again, you can see that it was outside here again, but what's happening is that the bull managed to keep the market in an uptrend. You understand now? And like I said before, we can't use the Bollinger Band alone. If you look at this particular area here now, where the price was actually outside the band, we can see that we have a very tall green candle here. So that means this is actually telling us that the bull came into the market aggressively around this period, and again it's followed by a long red candle. But at this particular period of time, we can see that the candle have a long wick below it, a lower long wick. So that means what this is trying to tell us is that the bear came in to push down the market, but the bull did not agree, and they kept on pushing again until they finally won and put the market in an uptrend again. And one thing again we should notice is that the middle band has served as support for the price actions. So none of the prices closes below the middle band. So when it starts happening like that, that the price start closing below the middle band, we should start looking for a reversal in the market also. So at this particular point here now, we can see that the price closes below the middle band, and it looks like we are having an uptrend. So the resistance has started forming from here again, because the middle band was meant to act as a support when the market is in an uptrend, but it was broken at this particular point, and from there it became a resistance. So from there it looked like the market was trying to go up, but since we have it from this point that the market closes below the middle band, so we should start looking for a short position at that particular point also. And it looks like the market went up for some time and it got rejected here, and we have it downtrend again. And at this particular point it was trying to go up, but it couldn't close above the middle band. It got rejected around that place. The price closes below the middle band, this first candle, the second candle, until we have all these downtrend, all this candle bringing the market down. So we should be able to analyze what this Bollinger Band is trying to tell us, and we can't just trade it directly like that. We should also look for candlestick pattern, or we should be able to analyze what is happening around that period of time when the candle is forming. We'll look into a strategy of trading the candlestick now. When should we go long? When should we go short? So we'll come back to our example again and analyze how the market has formed and where the market will go next. So let's start with our long strategy. So like we said at the beginning of the video that we'll be having a giveaway. The giveaway is simple. We will take the first 3 people that comment on this video and add them to our private channel, our premium channel, where we'll give signals on how to trade, and we'll also give coins that will do 10x, and that will probably do 10x. Don't let me make promise like that it will do 10x. That will probably do 10x, and also how to make money from cryptocurrency. Like, we'll let them know which IDO is going on. So the first 3 people that comment on this thread will automatically have access to our premium channel. Actually, the channel now is, we are opening our premium channel for registration now, and the first 5 people that comment after the 3 people again, the next 5 people that comment, will be giving them discount to join our premium channel for this month of October to December, the last part of the month, the last 3 months of the year. Actually, our channel is $100 for 3 months, and right now we are doing a promo for the next 5 people that comment after the first 3 people that will be put in automatically in our channel, in our premium channel. So the next 5 people that comment, will be putting them in, we'll be giving them 50% discount. So that means you are paying $50 to have access to our premium channel for 3 months, where we give you quality signals, and we'll also tell you cryptocurrency gems and a lot of opportunities. We'll open a lot of opportunities for you in the crypto world. So don't miss this opportunity. So now let's go to the long strategy now. when the price is at the lower band, it is considered as oversold. Get ready to go long. So at this particular point again, look for price if it has gotten to a major or minor support level. Look out for candlestick formation. Formation or pattern to confirm your entry point. And the last here is set your stop loss. So this is for the long strategy now. So for the long strategy, the first thing we have here is that when the price is at the lower band, it is considered as oversold. Get ready to go long. So we should not go long instantly. We should just get ready to go long. And we look for the next option here. So we look for the price if it has gotten to a major or minor support level. And when that is also confirmed, we look for the next thing, and which is candlestick formation or pattern to confirm our entry point. So, and the last but not the least option here is to set our stop loss. So let's take example for the long strategy now. So let's go back to our coin. So the candle is at the lower band here now, and number one, it is very oversold here now. It is oversold here now. So at this particular point, we should be getting ready to go long. So the next thing we look for is that the candlestick pattern of candlestick formation. Actually, this is forming a bullish RME, but it is not a clinical or textbook bullish RME. But the concept is that when you have a long green candle, a long red candle, followed by a small candle. So this red candle has engulfed the green candle. So this is technically a bullish RME. And when you have a bullish RME, that means it is a reversal pattern that the market is going to change momentum. So the market has been coming down greatly from here, and suddenly we have this. The first indicator now is that the market is greatly oversold from this long wick that we have. And from this long wick again, we can see that there are a lot of buying pressure. There are a lot of buying pressure at this particular point. So the market is greatly oversold from here. And from here now we have this, which is trying to let us know that the market is getting recovered. So with this bullish RME, we can go long. So we just do the reversal of this for our short strategy. So for our short strategy now, When the price is at the upper band, it is considered as overbought and get ready to go short. So major resistance level now. Look out for standing stick formation and just follow the previous process. So thank you for listening to this lecture, and I hope you practice everything we have discussed here. And don't forget to leave a comment so that you can be part of our winners for this ongoing promo. Thank you.